Aloha, everyone. Monday was another overall ugly day for the stock market. It appears that the character of this entire uptrend has finally changed. It started to change on Friday when we finally sold off on extremely heavy volume. Following all the above average volume since the beginning of the year, the churning did appear to be more accumulation as we drifted higher. However, the last 2 days, Friday and today, along with Thursday's down session, confirms that we are in a little bit of trouble here. The Russell 2000 was down the most again today, 1.43%, crashing below its 50-day moving average. The S&P 500 also was down today, 0.49%, confirming the selling, and the Dow Jones Industrial Average also confirming down 0.26%. But every index ended down, with the Nasdaq still being right on its 50-day moving average. However, stocks are really broken under there. Once again, we have a ton of sells, and this is getting to the point where not everybody can trade exactly like me. Most people maybe not can do 2% per position. You might want to increase it to 5-10% in the best selections, because whenever we do have turns in the market like this, when we're heavily invested, we're hit with tons of sell signals. So that means if you don't have substantial account capital along with very, very low commissions, something like today and Friday can cost you, because I'm sure I'm spending right around $50 worth of commissions the past 2 days. On a high five-figure account, any kind of 6 or 7, 8-figure account, obviously that's nothing. But if you're dealing with like only a 4-figure account, $50 in commissions the past 2 days can be a lot. However, if you want to look at it another way, back when I began trading, commissions were around anywhere from $8 to $20. $8 at Ameritrade, I believe $10 at E-Trade. I can't quite remember exactly what it was back in the old days, but whatever it was, they're extremely cheap now for me, only $1 each. So you can look at it that way. It's equivalent basically to 5 trades back in 1998 whenever I was using, I believe, Ameritrade. So I could do 5 trades now or do 50. So big, 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 big deal. And it's all about diversification and being safe. And that, though, unfortunately, we are down over 5% off my account highs, while the market here is down 3.21% on the NASDAQ and 3.81% on the Russell 2000. So that means that we did take a little bit too many positions there at the end. However, once again, that is what is going to happen when the markets reverse. Now, one of the biggest problems right now is that the volume in these inverse ETFs are huge. And that, along with the regular ETF volume that I'm seeing, I just don't see this as a regular pullback. Yes, we could easily find the lows here. We're still trending heavily above the 200-day moving averages. But even if we do find the lows anytime soon, the technical pattern, the way the symmetry looks in the chart patterns, they're broken. I mean, we just have a lot of broken charts out there, like AMG and CR that are full sells, FLT. iCloud's one of your minimal broken lists. Is basically that it's closing below the lows of days, 1450. I don't need to wait for a 1432 close with this market. But ONVO, as you can see here, and one of the biggest disappointments, a stock like Foner, FONR, that can give us 57% gain in under a month before it gave us our first sell signal. So we lost a 50% gain before we got our first sell signal, leaving with only a 31% gain. And now it's giving a second sell signal. Now we're only leaving with an 8% gain. That's the kind of stuff that's extremely, extremely, extremely disappointing. But you know, what are you going to do? I mean, what are you going to do? You're going to fight it? Let's say that you don't sell it now and you take a small loss and the selling gets really bad and out of hand and it turns into a huge loss. You're going to feel like a fucking idiot if that happens. So you just got to go ahead and take the insurance policy, and that's what these cut loss policies are. Now, on that note, I'm going to continue to take whatever account capital gets raised each day, and as long as we close lower, I'm putting it into this extremely leveraged ProShares Ultra Pro Short Russell 2000 Index SRTY. So we took all the account capital, which is a little over 2%. After Friday's close, we put in an SRTY today, and we're going to take whatever account capital exists now. I'm not too sure what it is. It could be 5%, it could be 10%. Whatever it is, 3%, it's going all into this SRTY. All the cash that's raised from these sells tonight, whatever's left, if we have another week session tomorrow, all that capital goes into SRTY, and we will continue this until the market can find a bottom. And like I said, even if it does, we have some broken red looking charts. And what's even more amazing about all this is that just last Wednesday we looked like we didn't have a problem in the world. Actually, we can go back to the 22nd. So it was on, yeah, it was Wednesday. So on Wednesday, last week, this market was looking absolutely amazing. 3 days later, we have significant problems. And that's an extremely quick turnaround of recent events. So to me, that's a red flag. So our models are into sell signals, very weak sell signals. I wouldn't get extremely insane. Let's say you have all cash and you're like, all right, I'm taking this sell signal short. I would wait for a rally attempt, if we do get one here, to first fail and we confirm that we are in a downtrend before adding any kind of significant short side positions. If the QE world is still in effect, we should find the lows at some point in time. We'll watch for the highest quality stocks to build bases, and we'll have buy stop limits ready to go for whenever they break out. Until then, it's time to be very defensive here.